Yeah, I mean, it really is a tale of two cities, right? You've got the difference between Main Street and Wall Street, and you're talking about the working poor. Well, the reality is, I mean, the middle class, they're becoming the working poor. Here in Ohio, they passed a rate increase just for power, electricity that kicked in this summer. And so people's utility bills went up as much as 30%, not to mention the increase, every time we go to the pumps, and to the grocery store. So, and taxes, right? I mean, the property taxes, everything has just been increasing. And so, people continue. We've had more people borrow against the retirement accounts, their 401ks, now than they did, in 2008 and 2009.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, it's August 6th. This first week of August has been mind-blowing here. The crash in the markets, I mean, I guess it qualifies as a crash. Is this the start of something bigger, or is there something else afoot here? Ed Siddel is with us now. Ed, it's great to have you back. Hey, I'd like to be laughing like our vice president here, but I just can't find it in myself.
Yeah, there's not a whole lot of things to be laughing at for sure, but thanks for having me back. Yeah, I think what we're seeing right now, Kerry, is, we saw some profit taking, followed by panic. Honestly, I think this is what the Feds, I mean, they've been reactionary the whole time. They've never been proactive under Powell's leadership or lack of it. But it does give them the ability to lower rates and dump more money into the system, do some more quantitative easing, I think is going to happen as well. But I think they're going to lower rates as much as 1%, if not a little bit more, before the end of the year.
Hey, so is this good for gold? Is it good for stocks? What do you do? Because the average person out there, which I feel like I'm one of them, is not really sure what to do. My gut feel tells me this little mini crash here, the fact it's happening in August, the fact that, they were leaning towards cutting rates, the Fed, but they didn't do it yet. There's something afoot here.
Yeah, I mean, we were expecting a correction as far back as March, April, and we did. We hit correction, territory. We almost hit bear territory with a NASDAQ. But again, I think it was this panic, the panic index, the VIX that went up like 100 and whatever it was, 150%, 160%, or 180%, whatever it was, in a 7-8 hour period, just showed that the sell off. I don't want to say that it was planned, but those the powers that be, these hedge funds, these large institutional investors, they were taking profits, knowing that, the Feds would be able to come back in, lower rates, do some more easing, and then have the ability to, turn around and make some more money. But I think the reason that they're going to lower rates, as a bigger picture thing from an election cycle standpoint, is to have the market rally right before the election and say, see, I told you so, everything's great.
You could very well be correct there. I certainly wouldn't put it past them. But, little things like inflation. Now, I'll admit I'm affected by it, just like you, but not so much as the people, the working poor, the middle class. Those people are being decimated, Ed.
They're being crushed.
Yeah.
Yeah, I mean, it really is a tale of two cities, right? You've got the difference between Main Street and Wall Street, and you're talking about the working poor. Well, the reality is, I mean, the middle class, they're becoming the working poor. Here in Ohio, they passed a rate increase just for power, electricity that kicked in this summer. And so people's utility bills went up as much as 30%, not to mention the increase, every time we go to the pumps and to the grocery store. So, and taxes, right? I mean, the property taxes, everything has just been increasing. And so, people continue. We've had more people borrow against the retirement accounts, their 401ks now than they did, in 2008 and 2009. We've got, bankruptcies up. We've got repossessions on vehicles up. So all of these things that we continue to look at, I say it all the time, right? The debt bubble. It just keeps mounting and mounting and mounting. And we're just talking about lowering rates. All that is going to do is continue to kick the can down the road. And inflation is going to, just get higher and higher, especially under the current economic policies or lack thereof. So we may get temporary relief as far as the market goes, but Main Street, I mean, it's not going to benefit them nearly as much as it is, Wall Street, for sure.
Yeah, Main Street's bleeding. Wall Street is profiting, right?
As usual. Right. Yeah. Which is typical.
Yeah. Well, that's the way the system is designed. I hate to say that everything's rigged, but everything is rigged.
Yeah. When you see the same hands being dealt, it's cyclical. We saw it, in the, early 80s, we saw it, the tech bubble with the housing bubble. And, we're kind of seeing it right now. Every couple of years, there seems to be a reset where we get to a certain point and, things back off, and, those who make money make more, and those who don't, they lose out. And so I think that's why, having a strong economic policy and more importantly, strong energy policy and bringing manufacturing back to the U.S. is going to be so very important in order to have the American dream be reinstituted, because I think it's faltering right now.
Hey, I think you are correct on that one for sure. So this looks like it's going to be good for gold, precious metals, maybe crypto. Crypto even got hit, Ed.
They got crushed. Yeah, I saw it get all the way down to 49,000. Obviously, bounced back up, but that was a pretty steep drop. Gold went down a little bit, but I think with what we're seeing right now, the U.S. dollar, dropping, not getting a little bit weaker, that's going to be good for gold. I mean, that's telling us that there's some inflationary pressure still on the horizon. Everyone's so focused on the jobs numbers, and those, I think those stats are skewed. It goes back to the old saying my economic professor used to say all the time, right? There's lies, there's damn lies, and there's statistics.
So, yeah, mine said that. Right. We have we go to the same school there.
we may have. Hey. So you really have to do your own research. You really have to look at the big picture. Everyone's just so myopic in their thinking. And so yesterday, right, when the market was tumbling and, now's the time to run, go ahead and cash in your chips and everything else. Well, by that time, it's already too late, right? Those in the know already got out, but I think there's still some good buys out there. But, boy, I'll tell you what, if you have cash sitting on the sidelines, I don't think this is done yet. I think there's still going to be some yo-yoing going on and until they lower rates. And I think that's going to cause a rally in the near term. All right. So between now and the end of the year, but I'm telling you, in my heart of hearts, I think the election is going to have a huge effect on the outcome of not just the economy, but the markets and everyone's retirement savings.
Hey, I want to talk about housing for a minute, because that goes hand in hand with rate cuts. Already got inventory shortage. Although as rates have gone higher, less people buying, but the inventory is so low. We do have pockets of weakness, like in Miami, in Florida, the condo market, for different reasons. Those are localized reasons, due to state law requirements, insurance crisis in Florida. But I will point you to, we're talking here, August 6th. Lennar just made a new all-time high, all right? Or close to it. Its all-time high, 52-week high was 182.53. it's barely under that at 174.
Wow.
It's the same with like you look at D.H. Horton and if you look at the charts on them, all of them are going higher as of today. So what does that tell you, huh?
Well, absolutely. And I think that's part and parcel to, the bonds going down, the U.S. Treasuries, the 2-year and the 10-year, dipping down so much. I saw yesterday where, a 30-year fixed rate mortgage, is 5.8%. And so I think that's spurring on, okay, people that may have been waiting on the sidelines. But housing is so unaffordable. In order to make it more affordable, interest rates have to come down. It's a double-edged sword, but then the prices are going to go back up, right? So it's supply and demand. You were talking about inventory, here in our area, there's hardly any inventory. People are knocking on doors, hey, do you want to sell your home? Because there just isn't anything out there. There's definitely not anything affordable. You're lucky if you can find any kind of a home under $500,000 in any neighborhood. And that's, when the average price of a home 4 or 5 years ago was, just a couple $100,000. And don't get me wrong, that's a lot of money too, but to have it, more than double in such a short period of time, that's telling you that there's something else afoot for sure.
Yeah. Yeah. So once the election madness is over, we going to have a real crash, or are rates going to be firmly rate cuts ensconced? We go on. And how does this fit in with the carry trade as well?
So, I think the outcome of the election, right? If the current economic policies, if the current administration and the current policies are being furthered on, it's going to create a huge economic downturn, and I think the market is going to suffer dramatically. If there is a change in the administration, and more importantly, the economic policy, and we become energy independent again, I think we're going to see a spurt of economic growth that's going to be continued on. Talking about the carry trade, especially as it relates to the yen, I don't think that's what caused the huge fear issue yesterday and the big decline. I think it was the first time that the NASDAQ was ever down 1,000 points, in one day, ever, at any point in time. So when Japan raised their rates, it shrunk that arbitrage, and so a lot of people were buying that on margin. So they were borrowing money from foreign banks and Japanese banks especially, and buying it in the yen and, paying 0.1% or 0.25%. And, even putting it in U.S. Treasuries at, 5%. And that, that's a huge arbitrage. But then when you margin that account and you're having to pay interest on top of the loan, now all of a sudden you have a negative arbitrage, when Japan raised rates. And so that affected the yen. So I think that added insult to injury. But when you look at the global scale, the global economy, there is, continued inflation everywhere. We already saw the EU, lower rates. I think everyone's kind of waiting on the U.S. because if the U.S. economy falters, it's going to affect the global economy as well. So I think that will again, lower the yen. Not as low as what it was, but, there's all these things that we have to look at. But as a standalone, that carry trade, I don't think that was the cause that affected the huge decrease over the last couple of days in the markets.
Mm-hmm. Yeah, it's a kind of a pile-on effect, I think.
Yeah, absolutely.
One thing that nobody's covering is the implosion of the Chinese economy, the dissolution of the Chinese economic miracle over the past 40 years. It went up like that, and now it's going down like that. It's downright scary. And like you said about statistics, as much as you can't believe U.S. government economic statistics, you can't believe anything the Chinese say.
Well, exactly. I mean, that's why, investing in Chinese companies, I think is so risky because they don't follow the gap principles. So you don't really know what the underlying profitability of these companies are. And, so having our pensions and, sometimes a lot of government pensions in these funds that they have that are investing in these Chinese companies, I think is, the lack of a really good fiduciary standard. I don't think that it's proper because, I think they're at a tipping point. You still have all these cities in China that are completely vacant, and they're struggling. So I think they're faltering way more so than we are right now.
I couldn't agree more. And the massive floods they've been having, downright biblical. Business fleeing Shanghai, the business capital of the country. And, they said somewhere around 1 million restaurants have closed in China. And all of these problems, multiple.
Did you say 1 million restaurants?
1 million restaurants in China have closed.
Okay. I knew it was a lot. I didn't. Wow. Okay. That's significant no matter how you cut it. I mean, that's huge.
Mm-hmm. Yeah. So a lot of things. But of course, the American press doesn't cover any of this. So it really is only giving you like a small portion of the story and then blaming it on sunspots or something.
Well, yeah, I mean, we all act like we're surprised, right? Oh my gosh, now my mind went blank out. And now the rest of the story. Well, we're not being told the rest of the story. That's the problem.
Multiple stories on China. That's 1 million restaurant closures this year, just this year. Been many, many more in prior years. Yeah. But of course, again, that's the rest of the story. So it's the global economy here. The only thing holding it up really is the United States. And that's another reason why the stock market is doing better here because there's a lot of monkey business going on, but there's a lot of flight capital, and you can only own so much gold and physically account for it. And then you got to put it into paper to some extent. And
because you have to be able to, currency, you have to be able to spend it. And that's why, BRICS is a big deal, right? I'm not mitigating that at all, but, it's, I do not... Right now, depending on the outcome of the election, I do not foresee the U.S. dollar being surpassed as the reserve currency because where else are you going to put your money? I mean, are you going to?
There is no alternative, right? Well, quite a mess they've gotten us into. Hopefully, like Will Rogers said, ignorance got us into this mess, and ignorance will get us out, right?
Well said.
So, all right. And just tell us, where do we find you? How do we connect with you on the web?
Yeah, you can find us at egsifinancial.com. That's the best place to find us.
Excellent. And that link is in the show notes to this interview on financialsurvivalnetwork.com. When you go there, please sign up for your free newsletter. You just click Ed's link. You get to a site, find out all about it. And I like your approach. You're not locked into stocks, which sometimes are really a 4-letter word like yesterday. And, you got to keep an open attitude, an open mindset when you're looking for the long term because things change and therefore your investments need to change with them.
Absolutely.
All right. We'll see you soon. Thanks for stopping by, Ed.
Thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.